Hello traders, welcome to another YouTube Live. This is going to be a paper trading session. So basically what we're going to do is paper trade this market that we're currently in. We see it's on the daily chart of Tron. We basically hit our second low here, and what we're going to do is illustrate how we look at the markets and how we trade by going candle by candle, what our psychology is, what our ace setups are, what we're looking for within our trades that we're taking, and basically go over how we profit within the markets. So let's just start off here. Going to quickly talk about the support that we see here, previous level low there, and then we hit it again for a nice validation that it's a key level of support. That's going to be the first thing we do notice. And then we also see the structure of the market is still on a downtrend. Let's just get our snip tool here and just talking about the overall structure, what we're looking to see and what we're looking to find within the structure. So right now, we do see still lower highs and lower lows. This is a high, this is a high, this is a lower high, this is a lower high, and then we obviously see the lower lows here. But what we do see is this current price right now is holding a higher low. So that is a little bit of a bullish momentum move to the upside, although obviously we have not seen a higher low or a higher high form, but we do see the higher low. So if we do start to see the higher low, higher high formation come in, that would obviously be an indication that we are making a move to the upside, which then we are going to be looking for long positions. But at this point in time, we are still not validated that we have made a new higher high, so we're still not looking too long at this point in time. Just quickly looking at where we are right now, what we're talking about for lower highs and lower lows and higher lows, and seeing that shift from the bearish to the bullish. We see at this point, this is a high, this is a lower high, this is a lower low from this low, and then what we saw is we made a higher low, and then what did we do? Made a higher high, and then ideally what we're wanting to get is an entry at the low, at the completion of the higher low, and then we're going to ride the higher low up to the higher high. Obviously, we're not going to catch that perfect dot, but if it was this situation, we obviously look at this level of resistance we can see right here. But that is how we're going to be looking at the market, is the market structure of seeing the higher highs and higher lows when we're looking at the smaller time frame. That is also going to be in confluence with a horizontal level as well as an ascending or descending level when we are long or short, depending on which way we are. So that's the structure that we're wanting to see before we're actually wanting to enter in the market, is we want to see that shift in structure. So now that we discussed that, that was a little bit of a intro to how we're going to break this trade down. And then on the daily, we do see a nice little trend line that could be drawn. Let's just talk about it right here. We see the anchor point, and then we see a nice trend line getting drawn with 3 key touches, and then just using a projection, we can then close the gap to complete the last touch, which is our third touch. So let's just talk about the touch points there with the anchor point. So we have A, B, C touch points, A obviously being with the wick, and then a B being a candle closure. We really only see type A, so this is a type A with the anchor point because it's just the wick that we're using. We see another type A and a type A with just the wicks touching the trend line, and then we see another type A here, and then this is a type B candle closure, although I did not put the projection all the way to the candle closure of the type B, but we do have a lot of sensitivity and a lot of reactions at this descending zone, so we can then use it as a potential level of a support when we do get a break to the upside, and then we get a potential area where buyers are going to be located. So now that we have discussed the daily chart, we can now go into the 4-hour and look at exactly how this trend line is looking on the 4-hour. Looks pretty good. I think I might close this gap a little bit more, but it's touching this trend line and touching this trend line, so I think we're good. So basically what we're looking for is the price to break our descending zone, and then we'll look for zones of confluence that the price is going to retest on for us to validate that there is a potential area of buyers within the market. So we're just going to play it and see what the market is able to provide. Okay, so we got a big pullback there on the 4-hour. Let's break it down back on the 1-hour here. So we got a big move to the upside. What are we looking for? Let's just look back at the 4-hour to discuss what happened. So we got a strong push to the upside. Talking about market structures, it does look like we formed a new higher high. So this is the key level that we wanted to see break before we even think about entering long. And it looks like we did break it with the candle closure on the 4-hour closing well. So that's good for the bulls. That's a shift in trend, and that's a shift in confidence from the bears gaining confidence to the bulls gaining back their confidence. So we saw a strong move to the upside. That's great. And now we're seeing a pullback. Now thinking about our zone of confluence, where would the highest probability trend line be within this area right here? Because we're not looking for, things years dated back in history. We're looking for close on the 4-hour and hour time frame. We're looking for close proximity trend lines that have valid key zones that we can use to depend off of for this trade as a level of confluence in line with our descending trend line. So where is the closest area that we will be able to see? I see it very, very clearly right here. It was a previous level of resistance and then a new level of support. So we can see that's a very, very clear chart, clear area within the chart. So that is where we're going to draw our zone for a horizontal area. Now that we've discussed that, let's put it on the 4-hour. But before we jump in right into the 1-hour, we do want to discuss the market structure that we're seeing right now. Let's just move it up a little bit so we're incorporating that little wick right there. So talking about market structure on the 4-hour, which is the market structure time frame, and then the 1-hour is going to be the execution. We see that the price has now made a higher high, right? So we made lower highs. This is a high, this is a lower high, this is a lower high, this is a lower high. We're making lower highs, continuing to move to the downside. And then what we saw after this bullish push is now we saw a higher high, because this is a high and this is a lower high. And now we formed a higher high because this is a previous high and it broke the previous high. So now we made a new high, which is a good market structure potential for a bullish move. And now we're looking to enter at the completion of the higher low, because this is a low. Yes, it did make lower highs and lower lows at this point here. So this is a high, this is a lower high, this is a lower high. There was a descending trend line that connected the lower highs. We can just quickly draw that in right here. And once the price broke above the trend line and made a higher high, now we're looking for a higher low to retest the validated zone as a new level of support. And then we can see we made higher highs and higher lows right here, lower highs and lower lows right here, and now it looks like we're going to make higher highs and higher lows. So the waves of the market look strong. The market structure looks like it's in our favor, and that's really what we want to identify with our trades. We're not just looking for simple breaks. We're not just looking for simple triangles. We're really paying attention to market structure, because that is what is going to kind of structure the overall entry and exit, looking at higher lows and higher highs if you are long. And that's something to consider significantly when you are trading. So now let's talk about entries for this particular price action pattern. We're not looking to just enter right when the price enters this area. We're looking to see bullish confirmations and bullish pressure entering the market, seeing the injections of buy pressure entering this market of Tron paired with US Tether. I'm just going to have a drink of coffee for 1 second here. Awesome. All right. I see 2 people watching right now. If you have a question, just drop it down in the comments. But chat disconnected. Okay, we're trying to connect you. Should be fine. Okay, so if you have a comment, just drop them in the comments, and I'll be happy to answer any questions that you have. So we've completed the market structure. Now we're just going to play the price action, and we really want to make sure that we get a validation that there's going to be a new level of buy pressure. There's going to be a new level of support being held before we look to enter, because this could easily be a fake out that just goes right up and then right back down. We don't know, so we want to see the price hold a key level of support and before we look to enter. So we want to see buy injection. So now that we talked about what we're looking for, where we're looking for it to occur, we can then just continue with the price action and then play it out and talk candle by candle what we're seeing and what we're wanting to see happen before we enter. So we got a nice pullback. Now we're in the pullback range where we're looking to enter. We got a strong move down, but we're not entering just yet. We see elevated R vol, which is great to see. A little bit more sell pressure on the way down than the buy pressure on the way up, but that's definitely something to consider. but let's see how the upcoming buy volume comes in, as well as how the structure of the consolidation looks before we look to make a move towards the upside. So we got a little bit of buy volume coming in, bouncing with the wick down within the red area there, within our red support. Seeing a little bit of consolidation, seeing another low form right here. So we now touched our zone of confluence, where the horizontal zone and descending zone, so that's good. Now we're getting our injection of buy volume coming in. So it looks like we've made a little bit of a resistance around this zone here. And then now we got our, it looks like second wave of buy volume coming in. So this is the horizontal zone that now we are looking to get past, because now we've created a push, a rejection initially, and then we see our second rejection. So now we see kind of like a double top or an ascending trend line kind of formation at our key demand zone, which is good to see. And then just talking about within the consolidation between this candle right here, the low, and where we are currently located, we do see more buy volume coming in than sell volume just within that little consolidation zone. So that is good to see. Obviously, we want to look at the overall picture, but within this consolidation zone, it looks like we could have made a higher low, which looks good. Let's do a couple more candles. That was a very, very strong bullish move. We see lots of bullish volume coming in. Okay, so this looks very, very healthy. Let's talk about that market structure on the 1 hour time frame. So we got a push. This is the new higher high, and talking about the higher low that could form, we see that we made a low just touching our previous resistance, validating as a strong new level of support. We made a move up, tested this level of resistance. That is our first injection of buy volume. That is signifying that there's buyers within the market. We saw a rejection with the resistance holding. We made a move down. Now, the fact that we didn't make that same low to make a double bottom does provide indications that there are buyers within the market. So we made a low, but it was higher than the previous low, making a higher low. That to me is a pretty bullish sign. And then we now have our second wave of buy pressure, our second injection of buy pressure, really showing us that we have validation that there are bulls within this zone that we're calling our demand area, and we've broken above this zone, and on the 1 hour we held above this key zone. So now I'm looking to long. Now what I want to see ideally is a validation of a new level of support at this zone, because I don't want to enter and then the next red candle come back down here. That's not what we're looking for. So we want to see the next candle hold this zone and respect it as a level of support, and then we're really, really looking to enter. Okay, so it held pretty darn well. We see the price now breaking above and holding for a level of support. It looks pretty good. And let's just quickly look and take a step back for one moment, just seeing the larger structure of the market. And we see we made a strong move to the upside, closed. It's looking really good. We do see a significant amount of sell pressure come into the market. So I think we will wait for one more. This is looking really, really good for the bulls, because we made a higher low. We pushed past a nearby resistance, and it looks like we are holding it for a level of support. But I think I'm going to wait for one more candle to really validate this level of support. But overall, on the hour chart, it looks really strong. I'm really looking to enter, but I want to be a little bit more patient to see the bullish pressure, maybe pick the price back up to the recent high, somewhere around there. I don't mind having a little bit wider of a stop loss, maybe around 4.6%, if I am able to capture an entry around here, or unless we're able to get a move up and then come back down. An entry here would also be pretty decent. Let's just look at a possible trend line that could form this zone right here. So we do see a nice little trend line forming those higher lows, holding a support. And let's just get our projection in here as well. So it's looking really good. But I think I will wait for one more injection of buy volume, because we have two injections like we've already talked about. And I think I'm going to wait for one more injection of buy volume. And if it does produce a bullish candle and there is a validation for a third time that there's bullish pressure within the market, then I will look to enter, because on the overall 4-hour daily time frame, it's made a new high. It's broken the descending trend line, and there's a lot of things that look like the bulls are now taking control. So we see a little bit of a doji here. We see the price just barely closed above the zone, not seeing much buy volume, but it did hold above our support. So I think at this point it would be a good opportunity to put a feeler position. I'm not, just because I'm paper trading, so I'm going to wait for one more bullish candle. I'd like to see something along the lines of this, or some bullish candle that does indicate that there are bulls within the market. Boom, that is our indication. Wow, that's a very strong move towards the upside. So I'm going to put my entry right here. My stop loss will be below our zone. So it's going to have a stop loss of around just under 5%, let's say. And we made a new high from the previous high. We have a lot of validation that there's going to be buy pressure within the market. Let's say our risk is at 5% right there. And that is how we're going to be trading. Let's quickly, oh my god, look at the 4 hour here. Holy shit. Okay, let's just pretend that didn't happen and just look for take profits. The first take profit is going to be right here, making sure we have a risk reward of 2 to 1. And then just looking at potential take profits, we can also see this zone as a key level of resistance. And then we can also look back and say, yep, this is probably going to be a key level of support or resistance right around here. And then our next zone could potentially, depending on how the risk reward is looking, we could put one at the support right there, which is kind of in the middle, or we can put one a little bit higher up, potentially going to maybe this zone here. So we got 4 take profits, and let's just switch back to the 1 hour time frame to see how those risk rewards are going to be looking. So we got our first risk reward, definitely not awesome, 1 to 1, definitely not going to be taking that. The next one is 2.7. I will definitely incorporate that because we're not really going to be taking a risk reward of 2 to 1. That's not ideal. And then the third one is going to have a risk reward of 4.25, and then the last one's going to finish off with around a 6 risk reward, just under. So we're going to even out at a 4.25, so that's pretty solid. So I'll just take all these take profits here because let's just look on the 1 hour chart to discuss why we're looking to take profits where we are. So looking all the way back, key level of support that you can see back in historic timeframes, and then the middle one's very, very significant, resistance, support, support, and then the last one there is going to be a resistance, support, support, resistance, resistance, and it's just well defined all throughout the chart. So let's just play through it. On the 4 hour, we did see that the next candle was significantly bullish compared to the previous, but I really hope you guys understand why we're looking to enter, why we wanted to enter at this exact location. We were waiting for confirmation. We didn't enter on the first pullback. We could have entered a feeler, but we were really waiting for the bulls to come and push, giving us a third injection of buy volume, signaling that there's bulls within the market. We're not entering just randomly because we think that the buyers are going to be entering at the zone because it's pulling back. We want to see that there's confirmation that there's bulls in the market. We don't want to enter willy-nilly. We want to really ensure that we're trying to pick the highest probability situations and waiting for confirmation and waiting for buy or sell injections to enter the market, giving you 2-3 bounces of either support or resistance on your execution time frame will allow you to really pick and make sure that your entries are going to be the best possible entries they can be. Now, unfortunately, yes, they do sometimes just explode. Like, for example, this pullback right here, I wouldn't have entered here because there's no validation that there's going to be additional buyers entering the market. And if we didn't get a pullback, if it was a straight shot to the moon, I wouldn't have been able to enter because the signals that I'm waiting for wouldn't have been triggered. So there are obviously challenges with entering at a completion of exhaustion when you have price action confirmation that there is more buyers entering the market, but it will give you a higher, hopefully give you a high probability win-loss ratio, because that is pretty important as well. So let's continue with the price action. We got a very strong move to the upside. Still not going to raise my stop loss at this point because I want to have my first take profit get hit before I take any stop losses. And then boom, there's our first take profit get hit. What do? Instantly move my stop loss to break even. I just look for maybe a nice zone of sensitivity where price could maybe bounce back at, and I'll probably raise my stop loss up just above my entry point, so I'm covering commissions and fees and all that stuff. So probably just going to put it right around there. A little bit, not much. It's like really not much of a move. It's like maybe 1% profit, so not crazy considering we are risking 5, but just enough so it's covering commissions and all that stuff. So let's continue on and try to manage this trade with the best of our abilities. First take profit is hit. 33% of our capital is now taken out of the trade. We moved our stop loss up just above break even, and now we're just waiting to see if it'll hit our TP number 2. So let's see if it will. Boom, TP2 hit. We got a nice level of support that we can use for our new level of resistance right here. So if the price does pull back, I'll get stopped out here with now 66% of my capital out of the position. And then it will be an average of maybe around here because this is the final 33% if it doesn't hit my final TP area. So let's see if it does. And we might move our stop loss up more if we are able to hold a level of support. And it does not look like we are... hitting here, but it does look like we are able to hold a support. So now I'm going to move it up to this zone here, able to hold this nice low right here. So I'm going to patiently wait and see if I get taken out. Does not look like I got taken out yet. Let's see if it takes me out. Does not take me out so far, and it looks like it's curling up, forming like a little bit of a descending channel, like we can see here, and then also obviously the bottom. But going to stay patient with this. Looks like we are curling up. If it does have some hesitation out there, it might be worth taking a little bit more profit at the top there. So I think at this point it might make sense to take the 33 and split it into halves. So I take another additional half here because we got rejected off that zone. But for just this paper trading example, I'm going to leave this here, and that's an option. As a trader, you could do that, split your 33 in half, take 50% of the 33 here, and then leave the rest for here because it's rejected this zone, and initially the rejection had a really large wick on the first rejection. So we see a move down, and let's see if we're able to hold that same zone again. Looks like we're seeing some buy pressure enter that zone again. It looks pretty strong. We're at that resistance. Kind of forming a little bit of a squeeze. Let's see if we get a push above the squeeze. Yep, we got a push above the squeeze. Good to see. Close at a new high. And let's see if we can get an extension above. Pullback and holding a little bit. And there's that extension up. So, did not hit take profits yet. Let's just see if the next candle will. Yep, next candle did hit take profits. So that is the overall trade on the 1 hour chart, and that's how we would have managed it. Yeah, at this point you could have taken 33% off and then left the rest of the 33% to see if you would have hit the last take profit. But regardless, we got the meat of the move. I don't know if it'll move up even more at this point, but we got exactly what we wanted. Our average risk, or our risk reward to total, was around 4.5, within the middle of the averaging out there. And we managed risk pretty well with guaranteed profits pretty quickly after the entry. So let's look at it from the 4 hour time frame as well and discuss why we entered, where we entered, and look at it in a little bit more of a macro view. So we saw the break, key level of descending resistance, 1, 2, 3, 4, 5, 6, and then we didn't get any sort of resistance on the way up breaking it, but we did get a nice hold of that zone. So this is what I'm talking about. We didn't really get any level of a any level of a rejection or anything like that. What I was trying to say, there's no real reaction from the price on the move up. That was initially what I was trying to say. No reaction on the move up, but we were looking for the pullback because we wanted to enter at the completion of the exhaustion, completion of the retest move, somewhere around there. We're looking for a consolidation. That's exactly what we saw. We saw a move down. We saw initially the price hesitate to move above this key zone, closing at this area. That's our first indication of a level of sensitivity within this consolidation zone. And then we held for resistance twice. That's our second confirmation that this is a zone of sensitivity, and then we get rejected for a third time, and I'm like, okay, this is definitely somewhere that if we do break above, we could see a shift in trend because we're already in a bigger time frame potential push exhaustion push phase. So we're looking for the completion of the exhaustion, and that's what the overarching view is within the chart. Can't get that eraser there we go. And then what we're also looking for is within the smaller time frames, we're looking for breaks of resistance, holds of supports. Or I think a better, oh my god, I can't get this eraser to click for the first time. Okay, so we're looking for resistances that turn into supports, and then we're looking to enter once we get a validation that that support is held as a new level of demand, and that's why we entered up here. and not here is because we were waiting for that completion of the third impulse push. So we see injections of buy volume come in here. Initially, we saw the first injection of buy volume. Even on the 4 hour, you can see it pretty clear. We saw the first injection of buy volume with that big bullish wick, and the second of injection of buy volume, but we didn't see a confirmation that it's going to break that zone. We needed to see that initial momentum start to push us back to the upside, seeing that new support be held well, and then we looked to enter long. But definitely something to keep in mind on the 4 hour. This is something that I wouldn't love to see, but this is also going to illustrate why price action is king, and we always look at price action first before we look at the volume or any other indicator or tool that we use. We don't use indicators, but like, for example, a volume is a tool that we use, but it indicates potential moves, so that's what I mean by indicators. We don't look at RSIs or MACDs or anything, but we can see that within the volume, there's a lot less buy volume than sell volume, so there's less buyers on the way up than sellers on the way down. So that is a little bit of a red flag when you are looking for pullbacks to make a move to the upside, but the confirmation of a break in resistance, a hold in support, making a higher high and then holding a higher low did give me enough confirmation to enter long here. I was a little bit more conservative in not entering at the completion of the low right there. That would have given me a little bit better of a risk reward, but I wanted confirmation of a bullish move and bulls entering the market, because definitely the volume is for one thing, and also the fact that we were right at the zone and we only saw a bullish doji, which is a little bit of an indecision in the market, and I don't see a whole lot of confirmation that there's bulls coming into the market. I only saw 2 injections of buy volume, and that third one did it for me. That gave me enough confirmation that I was going to enter this market, and that's what we did, and that is how we would have managed that trade. So I hope you enjoyed this paper trading. What was the number 5? Let's just see what the price action did afterwards. Just looking at it on the 1 hour time frame. Let's see what it did afterwards. And we're making a low. It would have hit the stop loss if we didn't take profit at that zone. We're consolidating at our major structure resistance. Wow, really seeing it. We made a push to the downside. This is a bit of a pullback, it could look like. Just consolidation, not a whole lot. Very uninteresting. That was a very long consolidation. Wow. But anyways, that is how I would have traded this situation, this setup, because it was, for me, a very strong setup. We saw the resistance turn into a support, which turns into a key zone of confluence for our trade right here. Turns into from a support to a resistance to a support again, which is also in confluence with our descending zone, giving us a high probability that there's going to be buyers within this area. Within the actual execution time frame, we're looking for the market structure, higher high, higher lows, breaking resistances, holding support, seeing nice volume accumulation occur. A lot of things we're looking within the small zone, but we saw enough in this particular trade setup in order for us to enter a trade. This would definitely be a plus setup where we see a zone of confluence within this area, and we're looking and seeing a very good solid trade setup potential on the 1 hour time frame. We're seeing high RVOL. There's a lot of things that are going positive with this trade. Now, obviously, every single trade is not going to look like this massive move straight to the upside, hitting all take profits, but we basically look at each setup the same. So if we have a descending zone with a horizontal zone or confluence, we're going to trade it in a very similar or exact same way almost, where we're looking for take profits in a similar way, we're putting stop losses in a similar way, we're going to trade it in a very similar way, because that will build dependability in your system and in your setup, but also it will gain consistency throughout time, because the only way you're going to gain consistency is if you yourself as a trader are consistent. If you're, I don't know, one time taking profits all the way up here, and then the next trade you're like, just I'm going to take 2-to-1 profits, and you're changing your take profits all the time, you're changing your risk reward all the time, you're changing your position size all the time, you're changing your setup indications to enter or exit the market all the time, you're changing all this stuff, you're not going to be able to get any level of consistency, because you're always changing your setup, you're always changing the structure of how you trade. But if you have a similar structure of how you trade every single time that you can depend on, that you can replicate over and over again, that will give you the ability to back test over and over again, and then that will also give you the ability to refine your system, because you have things that you can kind of gauge higher or lower. If, for example, if you're giving enough room for your stop loss, instead of just the first low, you're looking at the second low. or you're looking for only 3 injections of buy volume to enter instead of just 2, or if you have things that are like written on paper that you can say, this is my entry signal. If this A, B, C, D, E, F things happen, I will then enter. Then you can tweak it, because then you have a system. You have a list of signals or a list of things that need to be completed before you actually enter the market. And you can tweak those. But if you have a random guessing, it's a touchy-feely sort of emotional entry signal, you can't really refine and tweak it, because if your entry signal is, it just feels really good to me, it looks great, there's nothing you can tweak about that. There's nothing you can say, okay, this is why, this is the problem, this is why my trades aren't working. For example, if you're waiting not long enough to enter, if you're only looking for 1 injection of buy volume, or if you're looking for no injection of buy volume, you're just waiting for the price to come back to your zone, and you're entering a buy limit order just right at that zone, and you're not waiting for any sort of confirmation, you can identify, oh, this is why it's probably not working very well, is because I'm not waiting for that indication that there's going to be buy pressure within the market, or I'm not waiting for the confirmation of a break in trend, or I'm not waiting for the pullback, and I'm entering at the completion of the impulse move instead of the completion of the exhaustion move. Or there's a lot of things that come into play, but you have to basically wait until all the things on your list are ticked off and completed before you can enter. And the more systematic you can make that, the better you're able to identify what is not working within your system. So that is the ramble of the day for the completion of the paper trading session. We usually have a little bit of a ramble. Sometimes it's psychology, sometimes it's trade management, sometimes it is entries, sometimes it's overall trading advice, tips, experiences that I've had in my life that helped me. Just a little bit of tidbit of information that I kind of randomly throw together to sum up every paper trading session. So I hope you enjoyed this one. If you have any other questions, any other ideas for what we could potentially do next, if you have a good understanding of how we use our trading methods but want a specific question, DM us within our Discord. And if you have no idea what the Discord is, we have almost 1,400. I think we're above it now, which is astonishing. It's crazy to me. We have a community on our Discord that holds over 1,400 individuals are interested and enthusiastic about crypto, about trading. It doesn't necessarily have to be about cryptocurrencies. Mainly we are cryptocurrency based, but people talk about stocks, people talk about forex, commodities, you name it, options. We are a multi-asset community that all has an interest in trading or entrepreneurial endeavors. So if you are looking for a cool, fun, friendly community that you can discuss interesting ideas about, definitely check it out. We also obviously produce a subscription service that allows a mentorship program one-on-one, where we streamline the process of how to understand the markets and how to profit, similar to how we trade, as you can see within this video. It's very interesting, and we have a lot of videos, books, other tools, Excel sheets that all provide educational and informational documents and other knowledgeable information that's also going to give you an edge in the market, so you can make money, so you can actually enjoy being in the market. So I hope I illustrated that clearly enough. And like always, I hope you guys have a great Monday morning. We definitely will have a good week to start off here, to start off our second week of February. So until next time, happy trading, and I hope you guys have a profitable week.